Right, let's talk about banking. It's a topic that can make your eyes glaze over faster than a C-SPAN marathon. But stick with me. This isn't about interest rates or mortgage applications. This is a story about a bank that was less of a financial institution and more of a criminal enterprise with a shockingly good PR department. I'm talking about the Bank of Credit and Commerce International, BCCI. For a while it was the fastest growing bank in the world. It was a sensation, a powerhouse, a symbol of third world ambition sticking it to the big Western players. It promised to uplift developing nations, give a voice to the voiceless. Sounds great, until you realize its business model was basically the financial equivalent of a Bond villain's side hustle. Imagine a bank that operates in over 70 countries, has more than 1 million depositors, and handles billions of dollars. Now imagine that bank was the preferred financial partner for drug lords, dictators, arms dealers, international terrorists. That, in a nutshell, was BCCI. So, who was the mastermind behind this financial house of cards? Meet Aga Hassan Abedi, a charismatic Pakistani financier with a vision. A mystic, a poet, a philosopher, a man who could sell you on a dream. His dream was to create a bank that would serve the developing world, Asia, Africa, Latin America. He believed the flow of capital, and therefore power, should be redirected from the north to the south. It was a powerful, intoxicating message. Born in British India in 1922, Abedi started his career in banking and rose quickly. He was brilliant, charming, endlessly ambitious. After founding a successful bank in Pakistan, which was later nationalized, he set his sights on something much, much bigger. In 1972, with investment from Sheikh Zayed of Abu Dhabi, Abedi launched BCCI. His pitch was simple and seductive. A bank built on relationships, not just transactions. It would be a family, a community, a movement. He recruited young, bright graduates from his home country and across the developing world, instilling quasi-religious devotion to him and his cause. What made BCCI unique was its corporate culture, a cult of personality centered on Abedi. He was the guru, the patriarch, the spiritual leader. Employees showed absolute loyalty, worked grueling hours, chased rapid advancement, and shared a sense of purpose. Abedi held court for hours, speaking about destiny, spiritual fulfillment, the bank's grand mission. BCCI's growth wasn't just fast, it was explosive. In less than a decade, it went from a startup to a global behemoth with over 400 branches in 78 countries. How did it do it? Not by offering competitive savings accounts. BCCI went where other banks wouldn't and did what others couldn't. It targeted developing countries, befriended authoritarian leaders, became their personal and state bankers. That gave BCCI unprecedented access and influence. For dictators with sudden cash needing to move offshore, BCCI was the bank. Expansion came from bribery and influence peddling globally. BCCI offered gifts to central bankers, to finance ministers, to heads of state. Not just pens and calendars, lavish trips, interest-free loans, straight-up bags of cash. In return, banking licenses, favorable regulations, a blind eye to shady activities. It bought its way into country after country, building a network of compromised allies protecting its secrets. Key to this was the Black Network, a bank within a bank. It handled the bank's most illegal transactions, money laundering for drug cartels like Pablo Escobar, financing arms deals for Abu Nidal, moving CIA money for covert ops. The Black Network used shell corporations, secret accounts, a global army of fixers to wash the dirtiest money. This web was about intelligence and influence. BCCI knew powerful people's financial secrets, which politicians were on the take, which generals planned coups, which agencies funded proxy wars. That information was power. It made the bank indispensable to spies and statesmen, and too connected to shut down easily. For years, Western governments knew something was wrong, but the bank was too useful, too connected, and knew too much to be shut down easily. If you peel back the layers of BCCI, you don't find a slightly dodgy bank. You find a Pandora's box of global criminality. The list of scandals associated with BCCI is so long and so varied, it sounds like the plot of a terrible airport thriller. The most famous, of course, was money laundering. BCCI became the bank of choice for the Medellin cartel, helping Pablo Escobar and his associates wash hundreds of millions of dollars in drug profits. They didn't just move the money, they perfected the art, using a complex web of shell companies, wire transfers, and back-to-back loans to make drug money look like legitimate business revenue. But laundering drug money was just the tip of the iceberg. BCCI was also deeply involved in arms trafficking. It financed illegal weapons deals across the globe, providing funds for conflicts in the Middle East, Africa, Latin America. The bank was the financial intermediary for the notorious terrorist Abu Nidal and his organization, handling their money and helping them acquire resources to carry out attacks. It was also linked to financing Pakistan's nuclear program, helping to move funds and acquire technology in secret. Essentially, if you were involved in any activity that destabilized a region for profit, BCCI was ready and willing to be your financial partner. No questions asked. Then there was the fraud. Oh, the staggering, monumental fraud. BCCI wasn't just facilitating crime for its clients, the bank itself was a criminal enterprise. It systematically faked its own profits for years. The bank was functionally insolvent for most of its existence, covering up massive losses with money from new depositors. A classic Ponzi scheme on a global scale. It created fake loans, invented phantom profits, and shuffled bad debt between its various unaudited branches to hide the truth from regulators. All the while, its executives were siphoning off hundreds of millions of dollars for themselves, living lives of unimaginable luxury on stolen money. And let's not forget the spies. BCCI had a very cozy relationship with intelligence agencies from around the world. The CIA, for instance, used BCCI to funnel money for its covert operations, including funding the Mujahideen in Afghanistan against the Soviets. While the CIA later claimed it was just a client of the bank, evidence suggests the relationship was far more intimate. This connection with the world of espionage gave BCCI a powerful shield. For a long time, investigations were hampered or shut down because they risked exposing embarrassing and illegal covert operations conducted by Western governments. BCCI wasn't just a bank, it was a nexus where crime, finance, and international espionage all met. For years, rumors about BCCI swirled, but no one could pin anything concrete on them. That began to change in the mid-1980s thanks to a U.S. Customs undercover operation codenamed Operation Sea Chase. The plan was simple but daring. Agents would pose as money launderers and try to infiltrate the financial networks of the Medellin cartel. They expected to deal with shady characters in back alleys, but instead, their investigation led them straight to the polished, marble-floored lobbies of BCCI. They weren't dealing with low-level crooks, but with senior bank managers who were all too eager to help them wash their fake drug money. Undercover agents posing as corrupt businessmen managed to record hundreds of conversations with BCCI officials. They openly discussed the best ways to launder illicit cash. They talked about creating shell corporations, falsifying paperwork, moving money through the bank's labyrinthine global network to make it untraceable. The evidence they gathered was damning and undeniable. It was the first time any law enforcement agency had managed to get a real look inside BCCI's criminal machinery, and what they found was worse than anyone had imagined. The bank wasn't just turning a blind eye to crime, it was actively marketing itself as a service provider for criminals. In October 1988, the investigation culminated in a series of dramatic arrests. U.S. authorities indicted BCCI as a corporate entity, along with several of its top officers. The charges were for money laundering and conspiracy. This was a massive blow to the bank's carefully cultivated image of respectability. Suddenly, the whispers and rumors were front-page news. However, the initial victory was bittersweet. BCCI, with its vast resources and political connections, fought back hard. It pleaded guilty to the money laundering charges in a deal that many critics felt was far too lenient. The bank paid a paltry fine of $15 million and was allowed to continue operating. It seemed for a moment that BCCI might just survive. But the Sea Chase indictment had opened the floodgates. Journalists and regulators, now emboldened, began digging deeper. A report commissioned by the Bank of England known as the Sandstorm Report was finally taken seriously. It detailed massive, widespread fraud at the heart of the bank, confirming that BCCI had been insolvent for years and had fabricated its profits. Armed with this report and mounting pressure from U.S. investigators like Manhattan District Attorney Robert Morgenthau, regulators around the world were finally forced to act. The game was up. The web of deceit was beginning to unravel, and this time, there would be no escape. On July 5, 1991, the hammer finally fell. In a coordinated global raid, regulators in 7 different countries simultaneously moved in and shut down BCCI's operations. They seized assets, froze accounts, and locked the doors of its branches from London to the Cayman Islands. It was the largest and most complex international bank closure in history. The collapse was sudden and catastrophic. Overnight, more than 1 million depositors, many of them small businesses and ordinary families in developing countries, lost everything. The bank that had promised to be their champion had, in the end, become their predator. The fallout was immense. The total losses were estimated to be somewhere between $10 and $20 billion, making it one of the largest financial frauds the world had ever seen. The human cost was devastating. People lost their life savings, their businesses, and their futures. The political cost was also high. The scandal left a trail of ruined reputations and deep embarrassment for governments and regulatory bodies in the UK, the US, and elsewhere. It exposed a catastrophic failure of international oversight. How could a bank this corrupt operate on such a massive scale for so long without being stopped? The answer was deeply uncomfortable. A combination of incompetence, willful blindness, and the bank's own powerful connections. The legal process that followed was long and messy. Aga Hassan Abedi, the bank's founder, escaped justice. He had suffered a stroke in 1988 and returned to Pakistan, where he remained until his death in 1995, never facing trial. His second-in-command, Swaleh Naqvi, was extradited to the US, where he pleaded guilty and served a prison sentence. But many of the key players and powerful clients involved managed to evade any serious consequences. The liquidators spent more than a decade trying to untangle the bank's finances and recover whatever assets they could for the depositors, but they only managed to get a fraction of the money back. The story of BCCI serves as a chilling lesson in the dangers of unregulated global finance. It demonstrated how easily a determined and well-connected criminal enterprise could exploit the gaps in international law. In response to the scandal, governments around the world tightened banking regulations and improved cooperation on supervising international banks. Rules on money laundering were strengthened, and the principle of consolidated supervision was reinforced. BCCI may be gone, but its ghost haunts the financial world, a stark reminder of what can happen when greed, power, and secrecy are allowed to run rampant. It's a reminder that sometimes, the biggest crooks aren't robbing banks, they're running them.